Hey guys, I hope you're all doing well. Welcome back to another post and another video analysis, this time for a much requested 1 to 20 EURJPY long position. So this was a trade that I held over 20 hours to hit my final TP. It actually ended up going even higher, so you could have had a potential of, if you held currently 1 to 37 and potentially even room to go higher with this IPA region here on the hourly time frame. So there's even a potential there for a 1 to 50, 60, etc. But I'm going to keep it to what I got, and I got a 1 to 20, and that's where I took profit. I'm not someone who typically holds trades over the weekend, although I do hold trades over a day-to-day basis, especially when it came to a trade like this. It made the most sense to do so. So let's get into how I actually figured out this trade. So first thing first, let's take it back to where I was when I first analyzed this entire situation. So let's take it back to the morning. I believe this was a Thursday morning, around 9 a.m. So we're in a situation here on the hourly where we're coming off of this bearish structure. Obviously, I think I showed you guys this trade in my previous post. But yeah, so we're in this bearish structure, and I'm trying to understand, okay, why is price so bearish? What is it trying to achieve by coming down this low? Now, obviously on the hourly, it's a bit difficult to tell in terms of going back and figuring out. But if you go and zoom out and you do a proper top-down analysis, what you will find, especially on the daily, right, is that there is this daily institutional candle. Now, why do I know that this is a daily institutional candle? Well, it's because of the fact that there was a sell to buy action that led to body closure above the previous high. If I show you guys on a line graph, you can see this was the previous high, right? And the body closed above this particular previous high as well as the high before it. Okay, body closure is what determines break of structure according to myself. So this was a sell to buy, an institutional candle that led to a break of structure. Therefore, it is an institutional candle on the daily time frame, and therefore it contains several amounts of sell orders within that need to be mitigated. That mitigation process is going to give us a guaranteed reaction. It is off of that reaction that we trade because the momentum will be in our favor from an institutional point of view. So I hope that makes sense. So from 9 o'clock, I was expecting some sort of a reaction in this area, right? Lowest possible reaction was obviously the lowest point of the institutional candle. So if I take it back to the hourly, I'm in a position where I am anticipating some sort of reaction. Now, we already get a reaction here, even from the 8 o'clock candle closure. When 9 o'clock begins, you can already see there is this big wick rejection. So it tells you that a reaction has happened. So therefore, a mitigation process has begun, or has already taken place, right? Those sell orders are being broken even. So let's investigate what does that mean for us on the 1 minute time frame. Right, so we go straight into the 1 minute. Now, as you can see, here is where the reaction took place. Did this reaction lead to a break of structure? For me, I would like to see price take out this previous high over here, right? This significant previous high before I even consider getting into the trade itself, right? So let's actually press play and see what happens. Okay, notice how when price came to battle this previous high, it didn't close above. Therefore, for me, there was no break of structure there. And for that reason, I simply wait. Notice price comes back down again. Therefore, we have yet to see that lower time frame break of structure, giving us that green light, that confirmation that it is time to actually buy. It is time to actually use the momentum of the higher time frame mitigation of the daily institutional candle to then look for an entry on the lower time frame. So I wait, and then boom, we have this massive burst up, right? Taking out the previous significant highs. It is at this point that I know there has been a break of structure. What's also interesting to see is the fact that we didn't quite get a 50% retracement. We didn't get that equilibrium retracement, which is necessary, which is something that has to happen for there to be a complete drive. So therefore, this entire drive is incomplete until and unless it retraces to that 50% mark or below. So therefore, what we see, and as you can see, I've already boxed up, is the base that led to the break of structure. At this point, I considered this to be the base because this was the base that took out the previous high. Again, if I take it to the line graph, you can see this was the sell to buy that broke this previous high, led to the break of structure here on the 1 minute, led to the break of structure here on the 5 minute, It led to the break of structure here on the 15-minute, taking out this particular high, and gave us this reaction, what we expected on the higher time frames. So with that being said, I know that this was the base that I need to enter off of. This is the base that is going to contain those sell orders that price will mitigate before it achieves its long-term objective. And as far as that objective is concerned, we've got IPA here, we've got liquidity that built up over time here, as I've drawn out. We've got targets with this particular area here. So those are the objectives. We need to use the momentum of the higher time frame institutional candle on the daily, this one here, to catch that lower time frame entry. Okay, so I'm going to enter here. So let's do a quick little entry analysis on this little area here. So very simply, I've already done I've already checked with the Fibonacci that it is within the equilibrium plus zone, so that is fine. Let's look at where all the orders are. So as you can see, there are several buy orders, but we are concerned with the sell orders. The buy orders currently are in profit. It is the sell orders that are stuck here that need to be mitigated. Now, obviously, the main quarter numbers that stick out are 750, 740, and probably a lowest point of 730. Now, if you look at where the majority of the orders are, they are around that 740 mark. So that is in and around where I'd be looking to enter. I believe I entered at 750 purely based on the fact that my broker, the spread is about a pip, so I needed to account for that. Therefore, I put it at 750. Okay, so with that being said, let's draw a nice and simple entry line here. And my stop loss was based on the entire mitigation of the base. So the base, the lowest point it could mitigate is this. This was the lowest point before it took off, right? So therefore, my stop loss is going to be beneath that, and I like to use a nice quarter number for that too, and I went with the 20. So I know that a reaction has to take place inside here, whether it be at 50, 40, 30, a reaction has to take place. Because I know this is a must, this is a guarantee, this has to happen as a matter of fact, that gives me the opportunity to break even regardless of what the institutions want to achieve. Okay, it is with that confidence that I put this pending order on, and let's look at how many pips of an SL. It was a 3 pip SL, right? So a very nice and tight stop loss, and it didn't have to be. I could have put, I could have put it down here, could have done a 8.5 pip SL, could have done it down here for a 13 pip SL. Guys, don't be afraid to use bigger stop losses if it is going to give you that confidence to then get those wins. Once you get those wins, you can earn the right to be able to use smaller stop losses like this. Anyways, let's then see if I can actually catch this trade, this entry. So price continues to go up. Notice how it didn't retrace. It didn't even come close to 50. Again, I have to extend the Fibonacci. Why? Because this is an incomplete drive unless and until it hits that 50 mark. Okay, now it's hit that 50 mark. It is a complete drive. It is at this point I expect for price to come and tackle that base. So let's see what happens. So at this point, it's coming to 1 o'clock. We are still in a structure of bearishness on the lower time frame, in this immediate time frame. Price is coming close to our entry point, and boom, we get the entry. Now notice where it reacted. It reacted bang on at 30, right, which was the lowest available quarter number. I wanted to enter at 40. I placed my entry at 50 due to broker spreads. Regardless, what do we get? That guaranteed reaction that we expected, right? It is upon this guaranteed reaction that we immediately break even. Therefore, even if price wants to just come and shoot down, no problem. We have no money to lose, nothing to lose, because we've literally broken even. So now we're in profit, and obviously now it's a matter of destination points. You can see certain liquidities that had been starting to build up with this trend line, and you'll probably see more to come if I just speed it up. Let's take it to the 5 minute. Notice how equal highs start to form. Again, attracting sellers. Attracting sellers, why? Because we need to get as many sellers into the market as possible to provide enough liquidity for us to then take them out and shoot up and fulfill our long-term objective. So pretty much the entire day went like this, with them just building liquidity. And then for me, I knew that I wanted to take profit here. Albeit that there could be reactions here, for me, my objective was taking out this IPA at the very least. Why? Because on the hourly, if you guys notice here, we have a situation where we have this buy to sell here, right? Price bought up to sell down. That led to a break of structure here, taking out this low. So I knew that some sort of reaction would take place because this is also an institutional candle. So internally, I tried to maximize my profit by taking profit before any reaction can take place, right? So the highest point available, for me, that was this 130.350, specifically around this area on the LTF. And then above that was obviously this entire buy to sell situation. So then in the end, I waited it out. I had to sleep on it, but that wasn't an issue. I'd already broken even, so I knew the worst case scenario would be I lose nothing. And in the end, I woke up to a beautiful take profit in the morning around 10 a.m. And it was a nice and simple 1 to 20 risk to reward ratio. So that in a nutshell is how I caught this trade, guys. I hope this video helped you guys. If you have any questions, feel free to DM me or even drop it in the comments below. And with that being said, I hope you guys have a wonderful weekend. Peace.